Alright, hi guys. So I hope that you guys watched the previous video that I posted a few days back. If you haven't, I'll post the link below. You can go and watch it. So like I said on the video, I said that I'll be active on YouTube. So I decided to bring a new video out where I'll be analyzing Explanka and LOLC. So what we're gonna do today is we're gonna briefly go through both the counters. I want to keep the video short. I don't want to make it too long, so we'll try and keep it below 10 minutes, so everyone will most likely watch the whole video. So yeah, so okay, so let's get into the Explanka chart. That's what we're gonna do. So before we get into anything, what we're going to do is we're going to look into the overall chart. We're going to zoom out and we are going to see what the trend is. So overall the trend is positive, right? So you can see you can see a consolidation phase over here for almost around 5 to 6 months, and then you see a very strong uptrend. So overall the price action is favoring the buy. So you know that you shouldn't be going against a trend. Like we spoke in the previous video, you should never go against trend. So what we do is, now we know that we should be focusing on the buying side. So now that we have that aside, we look into a few moving averages that are usually watched by most of the people. So what I've chosen to use here is the 10, 20 and 50 simple day moving average. Remember, it's a simple day, not the exponential moving average. So so overall what we see here is also that the moving averages are signaling a strong uptrend. You can see the 10 moving average above the 20, where the 20 is above the 50. So overall the moving averages are saying that we are in an overall uptrend. So now that we have all of that aside, let's look at a few chart patterns. So I'm going to take these moving averages off. So okay, so now what we see here is multiple flag patterns. Now I'm pretty sure most of you are very familiar with flag patterns, because if you have been following me on Twitter, that's one of the most common patterns that I've highlighted since the time that I started analyzing charts. So let's look at a few of these flags, which for those of you who don't know what a flag is, so a flag is pretty much by definition a continuation pattern. So if a flag occurs in an overall uptrend, that means that the uptrend is most likely to continue higher. So it's not that difficult to identify a flag. Very simply, a flag is where you have this consolidation phase, which is what we call a flag, and then you have a flag pole, which is pretty much a vertical move up. So that it should usually be a very strong vertical move. It shouldn't be consolidating, it should be vertical. So not 90 degrees, but as long as it's vertical, close to being vertical, then you can consider it a flag pole. So you can see 3 flag poles here. Over here there's one, so which is a pretty much a vertical move up, and then you see another vertical move up over here, which makes another flag pattern, and then you see another one over here. So far in the previous 2 occasions, what we have seen is that it has signaled a continuation in price action. So usually a flag usually consolidates downwards. So usually what we see here is both times the flag has pointed against the direction of the overall trend. That's usually a common thing. That's usually how a flag is, but sometimes you can see a more horizontal flag as well. So so looking at the chart, what we can assume is, as of now, prices are signaling that we have further upside. So to measure a price target, what we do is we pretty much measure the height of the flagpole. So what we do is we take the highest point over here, which is roughly around 240, and you minus that from the lowest point of the flag, which is 192.5. so that's roughly around 47.5 points. So what you do is then you add that into the breakout level. So over here, roughly our breakout level is roughly around 235. So adding 235 into adding 47 into 235 will give you roughly around 282 as a target, which was reached during this move right here. So you can see that after the breakout, you can see a very strong move higher. So the same way is how you calculate a target for this one. How we do it is we take the height of the flagpole, which is 296 minus the start of the pattern, which is 226. You minus that and you add it to the breakout point. So the same way we can measure a target for this flag as well. So this flag, the height is roughly around 385, and the start of the pattern we can take it as this point right here, which is around 280. So that gives you roughly around 105 points. So assuming that the breakout is at 285, which is the pattern high, we add 105 into 380, and we get a target of roughly around 485. Sorry, 490. So which roughly comes to around, oh yeah, it's almost 500. So so now that we have looked at a price target, which is also something that's very important, something that's more important is to know what will you do if the trade goes against you. So for that you need to obviously know a risk level where you're going to stop yourself out if prices go against you. So in that case we usually dig down into more shorter time frames to identify certain key support levels. So from here, the flag pattern will usually get invalidated if prices break below this 364 level, which is over here, right over here. So if you want to give more room, you can bring your stop down to around 355, but usually the flag will get invalidated if prices break below 364. So so now we have multiple things that we have identified. One is that the price action of Explanka is in an overall uptrend. The moving average are pointing towards an overall uptrend, and also we have identified a target price which is roughly around 495, and also we have identified a stop level just in case a trade goes against you. That's where you get out. So we have identified two levels. One is 364, and if you want to be a bit more conservative and you want to give a bit more flexibility into your trade, then our worst case stop would go below 355. So now that we have all of those aside, I want to just look into a few other things. So what we're going to do is we're going to look at a few indicators. I don't usually use indicators. I never usually look into them because I think they're very subjective, but yeah, let's just look into that. So roughly look into RSI. So RSI, we had this kind of divergence, the bearish divergence over here. So you can see that RSI was mostly creating lower highs, whereas the price was pretty much moving higher. So now that got invalidated because prices broke above and created a new high. So this is a good example of why you should never rely too much on indicators. I know multiple people who put indicators above everything else. Like I said in the previous video, price action comes first, volume comes second, and then comes all the other indicators. So some people are under the impression that indicators are what creates price, which is completely wrong. It is good to it's good to have in your arsenal if you want to kind of add more things into your analysis, but most importantly it does give you a lot of false signals, and it should never be used as the only indicator to predict a certain price move. So that's just something that I wanted to highlight. I'm not going to go too much into indicators. So that's just something that I wanted to show you. And finally, we're just going to look briefly into the monthly chart just to tell you guys something about it. Okay, so by the looks of the chart, it doesn't look that healthy when you see a chart like this on the monthly. So we have pretty much had a very, I mean, it would be an understatement to say that it's a very strong uptrend. It's been pretty much a very strong vertical move up. So I mean, I'm pretty sure a lot of people have made a lot of money, but my point here is obviously to point out the positives as well as the negatives. So the negative point here is obviously the prices are overextended, and I mean, usually when something goes up too quickly, it does have a steep correction. So not saying that it's a bad thing, but that's usually how it works. If it goes slowly, it corrects slowly. If it goes fast, it corrects fast. So that's just something that you have to get used to, nothing to be afraid of. It's just how it works. So on the chart, just highlighting that it's a bit too overextended, but like I said, as long as price action favors the buyers, you should be in the direction of the trend. So until the trend reverses or gives a signal of reversal, there's no reason to be fighting the trend, which is something that is not advisable. So okay, so that's pretty much what we were looking at for Explanka. So let's move into LOLC. So LOLC is pretty much the same thing. It also had multiple flags, but again, let's just roughly go through what we have been looking. So like I said, we zoom out of the chart and we look at the overall trend. So the overall trend is up. It means that it's the overall chart is favoring the buyers and you shouldn't be trading against the trend. So now that we have that aside, we look quickly into the moving averages to see what they're saying. So what we see here is, again, the moving averages are pointing towards an overall uptrend. The 10 moving average is above the 20, the 20 is above the 50. So overall the trend is up. And also something that we have seen is that the 10 moving average has been a good filter for price action. So you can see that multiple times prices have found a bit of support around this 10 moving average. So that is a good thing to know. I don't usually use a lot of moving averages, but I just used it because these are common things that people use. I haven't used the 200-day moving average because we already know that it's above the 200-day moving average, so I excluded that part. So now that we have that aside, we are going to quickly look at a chart pattern. So again, we have the same thing. We have flags and we have a lot of them. So here's one sort of flag, and here's another. You can call this a flag as well. And then here you have a bit more of a larger flag. So overall, the same way, the measuring implications are the same thing. You take the height of the flagpole and you add it to the breakout point. So so far both of these flags have worked and met its price target. So again, what we are waiting here is obviously for a breakout. So if we don't have a breakout, that means we can't confirm the trend. So a breakout will roughly come around 1150 roughly. It's not an exact point. So assuming that we get a breakout, then how we're going to measure a price target is we're going to take the highest point, which is 1210, and we minus it. We can minus it from here around 962, and that's around 248 points. So assuming that the breakout happens at around 1150, that gives us a target of roughly around 1400. So again, remember that certain patterns fail, so there's no guarantee until we have a confirmation. There are times when we get confirmation and prices completely fail as well. So there's no guarantee. So that's mostly the reason why you need to obviously have a stop level and know where your risk is. So now that we have identified the overall chart patterns, we're going to look briefly into the volumes as well. So volume, usually on the flagpole, volume should be high and volume should be increasing. So what we see here is volume is increasing as prices create the flagpole, and then as prices create the flag, you can see the volumes are really low, which is what you want to see. So overall, the chart patterns are good, solid. The volumes are also pointing and favoring towards the buyer. So we have put that aside now, and we're going to look into a stop level. So roughly, a stop level can be either of the 2 points. Either you can have your stop level below 1075, or for a worst case stop, you can have your stop below around 1000. So 1000 will be a psychological number as well, and it is horizontal support as well. So a confluence of reasons why it would act as support. So now that we have pretty much found everything that we need, we know that the overall trend is positive, it's favoring the buyers, the moving averages are well aligned, the volume is really good, and we have a target of 1400 that now we know where we are actually looking at. And also, most importantly, we know where our risk is. So we have two risk levels. One is 1075 for a more conservative trader, and if you want to give more flexibility into your trade, you can have your stop below 1000. So that's pretty much the same thing as Explanka. So we have looked at where stop levels are, we have looked at our price targets, we have looked at the overall trend. what it says. Is it favoring the buyers, is it favoring the sellers? So overall we have looked at all of that. Now we are just going to roughly move into the monthly chart as well. So again, looking at the monthly chart kind of gives you a signal to be a bit more cautious. It is a reason to be cautious, because obviously prices are too much extended. But like I said, as long as prices favor the buyers, you should be in line with the trend, and there's no point trading against a trend. And most importantly, you will miss out on a run if you are too scared to get in. So that is why it is very important to have stops. If you know where your risk is, you don't have to be afraid, because if you know that your stop level is this, that means you have agreed with yourself that you are happy losing this amount of money, and you won't be worried about it. So as long as you have a stop level in place, you don't have to worry about the trade. If you get stopped out, that means that most likely the trend is reversing, at least on the short term. So right, so that's about it on the two stocks. I think I took a bit more than 10 minutes to look into this, but I guess that I got the word out properly, and I believe that you guys might have learned a decent amount of detail into how to look into a trade, where to place stops, and so on. So yeah, that's about it. So the next video, most likely I might also do the same thing on two different other stocks. But for now, if the video is helpful, make sure to subscribe, like the video, and share it with your friends, and post your thoughts on the comment section as well. I would like to know, is there anything that I need to improve on? Is there anything else that I need to add into my other videos, and so on? So thank you for listening. Have a good day. Merry Christmas, and hope to post another video soon. Thank you, and thank you for watching the video, guys.